Good morning, everyone, and welcome to the Gold Road and Fortem Wealth webinar. I'm Aidan Lane, and I'm joined here with Duncan Hughes from Gold Road. This webinar is brought to you by Jackson Securities. Thank you for having us. Duncan, how are you this morning?
I'm good, thanks, Aidan. How are you going?
Well, thanks, Duncan. I'm very excited to be with you this morning and hear more about Gold Road and pass it all on to our investors in the larger market. So today's webinar, we're going to have a short presentation by Duncan, followed by some questions by me, and then we'll take live questions from the floor. You'll see on the right-hand side of your screen, there's the chat option to ask questions there. I will endeavour to answer as many as possible. If we run out of time or unable to answer them at this present time, you can follow with me, and if I can't answer them, I'll pass them on to Duncan and the team at Gold Road. Duncan, I'll hand over to you now for the presentation.
Thanks, Aidan. Good morning, everybody. So yeah, my name is Duncan Hughes. I'm Manager of Investor Relations and Corporate Development at Gold Road, and I'm very happy to be here sharing the story. I'll do a quick 5 to 10 minute presentation and then look forward to questions. So just bear with me while I show the correct screen. Yeah. Hopefully you can all see our presentation.
We can see that there.
Thanks. So I'll just take you through the story. Gold Road is a gold producer. It's in the ASX 200. It's also a gold explorer. We started as a junior explorer. We have this tenement package here, which is a frontier greenstone belt called the Yamana Greenstone Belt. This sits under a layer of desert sand, and for years nobody thought there was even a greenstone belt, let alone a gold belt out here. So hence the opportunity for us to peg all of this belt, of which we own 100% of it. In 2013 we made the discovery of the GRUYERE gold mine. It's now 8.5 million ounces. It's what we call a tier 1 discovery and one of only a few this century. In 2016 we did a joint venture with Gold Fields, a global major miner, where we went 50-50 with them. That essentially then buying into the joint venture funded our share of building this big, exciting project. We poured first gold in June 2019 and had our first calendar year of production in 2020. We work on a calendar year basis, so when I'm talking to years, I'm talking to a calendar year, and when I'm talking to dollars, I'm talking in Australian dollars. GRUYERE itself is a simple, large open pit with very consistent gold distribution. It's relatively straightforward to mine and happily it's straightforward to process. So that allows us to be low cost and happily a long life producer. This slide summarises how we believe we deliver value to shareholders and how we have already. As I said, it's a long life, low cost producer. There's not many companies in the ASX 200 that can show at least 10 years of low-cost production. We're in the Australian gold sector leading in terms of corporate all-in costs. This cost hides nothing. This is essentially all of our costs to produce gold, to explore and keep our office in West Perth open. The only thing on top of this will be dividends, which we are happily paying. Not surprisingly, you'll see we're in terms of free cash flow, one of the best in the Australian gold sector. Even though we just built this large tier 1 project 21 months ago, we're debt free with a strong cash balance. We're a dividend payer despite only being in operation at the time for 18 months. Good strong profit, but growth. So it's important to point out that yes, we're producing lots of free cash flow now, but the future is rosy as well. We think there's a lot more than 10 years at GRUYERE. You'll see that our production, I'll take you through a couple of slides, our production rate is increasing from here, and we'll look quickly at the enormous exploration potential through the presentation. So as I said, we're a very strong cash position for such a new miner. We're paying a dividend, and this is how we've built cash. You can see in this chart here. We have a little bit of hedging, which we put in place as any junior miner would put in place before they build a mine. About 25% of our production is hedged out until November 2022. As I said, we produce free cash flow. As an investor, I think that's obviously a sure sign that the business is doing well if you can generate free cash. This shows free cash per ounce compared with the other mid-tier Australian gold producers, and we're on the right side of that chart. EBITDA margin is the same. That's another way of looking at how profitable the business is, and again, we're top. This is for the 6 months to December 2020. We pay a dividend, as you can see on this chart. Not everybody does, and for our maiden dividend, you know, we compare quite well with peers on a yield basis. So that's the business is obviously producing cash. That's part of the story. As investors, I'm sure you're interested in the future. This chart shows where we put out our 3-year mine plan back in February of this year. 2020 was our first year, so we produced just shy of 260,000 ounces on a 100% basis. So half of the production you see here is to Gold Road. We're showing a range here where production by 2023 lifts to a very comfortable 350,000 ounces. With that, of course, with the increased production, which comes at higher grade and higher throughput, we get economies of scale. So the costs, the all-in sustaining costs, and in this chart, you're looking at the corporate all-in costs. So all the costs of the business before tax and dividends happily go down as we enjoy those economies of scale. And at today's gold price, that's nice margins. Beyond that, this image here shows up in the yellowy colour here, that hopefully you can see my cursor, shows our current reserve pit. Beneath that is a pit that shows our resources constrained within an Australian $2,000 cost. So everything we mine here up to that cost, obviously that's a fair way below where the gold price is right now. You can see with these magentas and reds that there's some good grades in there. Our focus this year is to try and push the reserve pit down and take quite a lot of these resources. Beyond that, we've got an inferred underground resource, which is these blocks in grey, which we published in February, which is nearly 1 million ounces attributable to Gold Road, which is obviously 50% of that. That's nice, but what we're focused on this year is just seeing the scale of the potential upside here. So we've started a program that'll cost Gold Road $2.5 million this year of framework drilling to test down below the current pit, down to 1.1 kilometres below surface, which is quite a long way. If this drilling comes back as we hope, then it gives us potential, you know, for another 5 million ounces or so below the current pit, which is obviously quite meaningful. So that's the focus at GRUYERE. Obviously, the 3-year mine plan is looking good, production's growing, and the mine life obviously shows potential to grow. But that's only part of the story. There's 4,500 square kilometres of essentially untested greenstone belt. We own 100% of it, with the exception of these 2 small yellow tenements around GRUYERE and some satellite pits here, which are in joint venture with Gold Fields. So this belt is unexplored. If you compare the scale of it, it's the same as around the Kalgoorlie Norseman greenstone belt. They've discovered and mined 160 million ounces there in 125 years of exploration and mining. This is a recent discovery and it's underexplored. It's only been mined for 21 months and only explored for 15 to 20 years. We found 8.5 million ounces. We feel comfortable that we'll find more. We've just got to do the work, and at the moment that's a lot of early stage drilling to prove up targets. That's essentially it. As I promised, a pretty brief overview, and I'll open up to questions. But you know, we're very focused at Gold Road on delivering shareholder value. We know shareholders own the business, and we think we're doing that through our strong balance sheet, which will continue to grow through high margin production. We see growth on the horizon through discovery and also improvements at our Tier 1 mine. And we're already giving shareholders returns through our maiden dividend in December. We pay it on a 6 monthly basis, so shareholders should expect another one in June. and total shareholder return since discovery is there, and obviously quite a good return for shareholders. So I will stop now and hand back to Aidan.
Thank you for that, Duncan. That was a great insight into what has been a great story so far, and giving a nice insight into what could happen in the future and what we have to look forward to, or potentially have to look forward to. So we'll just move to some questions now. So just initially, could you just provide some insight into the current story and theme in the WA gold mining sector as a whole?
Yeah, well, I mean, it's been a good year, 2020, for gold miners. Obviously, with the uncertainty in the world, the gold price travelled pretty well through 2020, and gold prices where they were at 2,500 or 2,600 Aussie dollars. There was some great margins for Australian gold miners. In the start of 2021, the gold price is probably, in Aussie terms and US dollar terms, has eased a little bit as bond yields start to pick up and there's an expectation of a global recovery. Not sure, I think that's checked itself somewhat over the last few weeks and gold prices lifted again. But there's good margins to be had. Aussie gold miners do a good job, and if you're making margins in the order of $1,000 an ounce, obviously it's happy days. Having said that, I mean, we've done a pretty good job in Western Australia of controlling COVID-19, and that's allowed us to all continue working. But with the sector booming, not just in gold but also in other resources, there are some constraints on labour, and that's something we just need to keep an eye on. So far, we're happy to say we haven't had any material issues with getting people to sit on drill rigs for exploration. We've seen a few challenges in getting some people to, sit on drill rigs in the mine, but it's only caused a few minor issues. Happily, there's been no interruption to production.
No, thanks for that insight, Duncan. And just out of interest, has there been any impact of COVID-19 in the exploration or the people to sit on the drill mines, people coming from overseas that doesn't allow for that? Has that impacted that market, that labour market?
Yeah, so it hasn't, as I said, it hasn't really impacted us. We've been able to continue exploring throughout. We had a slight blip here in Western Australia in February, which just slowed us starting up exploration for the year, which meant that our March quarterly didn't have an awful lot to say on exploration. But we've managed, at the moment, we have 5 rigs going at Yamana, and we expect to continue doing that through the year. It's certainly involved some work and some planning to ensure that a lot of our drillers came in from New Zealand. So with New Zealand opening up in the Australasian bubble, that's helped somewhat. One of the challenges for us in exploration has been assay turnaround. We drill the chips and then we send them off to assay labs to find out how much gold is in there. And these labs have had, with a bit of an exploration boom going on here, the turnaround on those results has been quite slow. But again, that seems to be picking up a little bit for us now.
Okay. That's good to have that insight there and to see how COVID-19 has impacted Gold Road. Premier, could you just provide a little bit of background on the story of Gold Road and the key people that are still there now?
Yeah, so I mean that slide that I had earlier touched on it. Gold Road initially started life as a junior explorer called Electra Mines, and they pegged this unloved, unexplored greenstone belt, which was previously explored for copper. Managed, for a junior to peg an entire greenstone belt, which is unheard of. Spent time drilling a small deposit called Central Bore, which is a small high-grade deposit that didn't really have the legs to justify building a mine in this frontier greenstone belt. But then in 2012, the team decided to do a big targeting exercise, and one of the targets that leapt off the page was GRUYERE. Then in 2013, that was drilled. We made the discovery, drilled that out, did all the studies, and then did the joint venture with Goldfields in late 2016. The team that drilled out GRUYERE is still very much here. That's led by Justin Osborne, our Executive Director of Exploration and Growth. And that team did a great job of drilling out the deposit in such a short space of time. Our CEO and Managing Director, Duncan Hughes, joined us in 2018. His experience was perfect for us in the sense that we at that time were morphing from an explorer and a developer into a producer. And Duncan Hughes' background is that he was the general manager at the Tropicana gold mine, which was one of the other two big tier 1 discoveries to be brought from exploration holes to discovery this century. So Duncan came on with the experience we needed on how to bring an asset like this on, and also had experience of managing a joint venture with a South African company, as we do. So he's been a real asset to the team.
Seems like a well put together organisation. It's good to hear that you have the diversification in that executive team as well. Just obviously you touched on the discovery side of things in the business. Could you provide some insight into the focus that you guys will have in discovery in the next 12 months or so, and what sort of cash position you're in to be able to achieve that? Obviously, we spoke about the cash flow in the presentation, and you've got strong cash flow there. Is that enough to continue, both the exploration and the mining side of things?
Yes, easily. So, I mean, we spend about $25 million a year on exploration, and we generated 106 million of free cash flow last year. Obviously, gold price dependent on where we go this year, but it's quite easy for us to fund exploration as it is, and continue to pay dividends and returns to shareholders. I think it's important to get the balance right. Obviously, with our all-in sustaining costs being, somewhere around 1,300 Aussie, that's easy to keep funding the operation. So yes, we're in a strong position to continue to do that. The plan for the next 12 months is to continue proving up targets for a meaningful discovery. 2020 saw us do a lot of early stage drilling, which meant there was probably not the exploration news flow that we hope to be able to put out this year. But as we advance some of those targets, we hope to be able to bring some of them towards resources this year and start to show some progress. Our strategy for exploration is to find a standalone deposit. With the free cash flow that we generate and the fact that we own half of the infrastructure at GRUYERE, this frontier greenstone belt is opened up for us, and we can tap into that infrastructure, and we can look to essentially transform the business by making a meaningful discovery. We just need to keep doing the systematic work, and the nature of the exploration ground out there is that you have to drill holes and you have to continue to test.
Yeah, no, definitely, and that's right. It's good to hear that you have that balance between the two, and obviously that cash coming through is very, very beneficial for a company like yours. Looking at, trying to ramp up production this year, is there anything that you're going to do different in how you manage that and sort of achieve those goals of increased production?
Yeah, no, thank you for asking that. It's an important message we need to get out. So 2020 was our first year of production, and essentially, like all operations, it was very much impacted by the fact that we were ramping up the mine. So ramping up the mine means, you do all your studies, but the real truth to it is when you start putting through the plant. So you're continually experimenting and you're tweaking and you're improving, and when you learn stuff, you shut down, for example, the ball mill to tweak it slightly so that it works better. So there was that, and then after mining a small amount of oxide at the mine, we then went and mined. This is a fresh rock deposit, and the fresh rock is harder than the oxide materials. So we just needed to do, again, some other shutdowns to tweak the operation to get it running properly for fresh rocks. So what that meant was 2020 was our ramp-up year. It didn't show the consistent performance that we should be able to do going forwards. The focus for us really to get the production rate up now is to improve our plant availability and our plant utilisation. So because of those shutdowns involved in the ramp up, which every operation goes through, plant availability for the year was about 83%. Industry best practice is somewhere in the mid-90s. So if we get that up, we're already seeing that the SAG mill, which is the bottleneck on the plant, but the plant is able to operate at a rate much closer to 10 million tonnes per annum, and that's our target over the next 3 years. We don't need to spend much capital to get there. We just need to become a bit more efficient in how we operate, and now that we're through the ramp-up year, should be able to get some more runs on the board there. So that's part of the story. We get the throughput rate up from 8.1, which we did in 8.1 million tonnes that we did in 2020 to 10 million tonnes. The other part of the story is that we started mining in a part of the pit that was closest to surface, but it also had the lower grade. We were mining at about 1.06 grams in 2020. As we move forward over the next 3 years, the grade picks up to 1.25, 1.3. That makes quite a big difference in the amount of ounces that we can get out.
Yeah, definitely. It's great to have that insight for shareholders. Obviously, something that they're looking to see increase in order to increase their value, because it's great to have that potential for discovery, but that baseline resource and making that as efficient as possible is very important as well. And just before we move on to live questions, what's the main difference between Gold Road and other miners within the region and as Australia as a whole?
Well, I mean, some of my slides hopefully showed that. I mean, one of the main differences is the amount of free cash flow we're able to generate because we're a low-cost producer. We're a long-life producer. Compare us to some of the other producers, and I don't think many of them can see at least 10 years ahead of that consistent production. So that, I think, lowers the risk in relative terms there. We also, we have a tier 1 deposit that goes on, we think, much further than that. So we've got the growth at GRUYERE, but few of the producers, I would say, have 4,500 square kilometres of relatively untested, underexplored greenstone belt. And that, I think, is the opportunity, if we make a discovery there, to transform the business.
Okay, we'll move to live questions now. Duncan, thank you for answering my questions. So the first question we have here is from Jacob. So Jacob's asking, why did Gold Road decide not to pursue the Tropicana acquisition? And what's the impact been on the share price since then?
Okay, well, thanks, Jacob, for that question. As it was quite well publicised in the paper to the point that we needed to put something out on the market. We were looking at Tropicana. So let's start with why we looked at Tropicana. We didn't control the timing of when the auction for Tropicana came up. That was obviously IGO's decision, but Tropicana is an asset that sits 70 kilometres from the bottom of our exploration tenure. It's a similar scale processing plant, and it, in our view, is a tier 1 asset. So geographically, it's close to us. It's also an asset we know well, given that our managing director was formerly the general manager there, and so our team know it. So definitely made strategic sense for us. If we are to look at any corporate development opportunities, we do not want to dilute the quality of the ounces that we're generating at GRUYERE. So we need to find a tier 1 operation, and it needs to be in a tier 1 jurisdiction. So we're not going to go to Africa or South America. And obviously with COVID, it's hard for us to look at North America. So Tropicana ticked the boxes. But, we put up regularly in our presentations a strategy wheel. And in the middle of that wheel is delivering shareholder value. And we stand by that view. And therefore, we had a view of what this asset was worth. and what we should pay in order to deliver value to shareholders. We state that we're looking for an accretive opportunity, and the price that another company was willing to pay was significantly higher than that. So therefore, I think we've demonstrated strong discipline in the fact that we're trying to grow a business from this great platform, but it has to be growth that is accretive and adds value to shareholders. And the second half of the question was, how has the share price performed since then? In relative terms, it's performed very well compared to the rest of the sector. I think that tells us that, firstly, shareholders are rewarding our discipline, but also I think the shareholders could see the value proposition in the stock beforehand, but we're sitting out of the stock just to see whether, if we did do a transaction to buy Tropicana, would we need to go back to the market and raise equity. It's now very apparent to investors that we don't need to go back to the market and raise equity, as we're generating so much cash ourselves. Therefore, investors are starting to come in and see the opportunity at Gold Road.
Okay, thank you for that, Duncan. Next question we have here is from Warwick. It's regards to exploration. Warwick's essentially asking, is there any different techniques or technology that you're using in exploration that give you a cutting edge or a competitive edge against other companies?
Yeah, we work really hard on that. One of the reasons we had the opportunity to peg the entire belt was because there is no outcrop there. There's also, because of a thin layer of desert sand, soil geochemistry, which is, you know, something that you might use elsewhere in Western Australia, doesn't work very well because it is masked by this surface sand. So we need to be quite clever with geophysics and with where we drill, and also we've built up a team here of what we feel is technical excellence, where we've got a team of geologists, structural geologists, geophysicists that build up three-dimensional models. So I think the combination of using geophysics, which, you know, looks through and tells us how magnetic the rocks are, gravity tells us how dense the rocks are, gives us a good feel for mapping things, and a good feel for mapping things in 3 dimensions, which is something I think we do very well. Other than that, we're probably using tried and tested techniques of doing air core drilling, which allows us to get through this surface layer of cover to test the rocks below. And then it's just really, it's you try new things, but it's always a combination of things. It's a combination of all the tools that a geologist has in his toolbox and staying focused. I think one of the key things about our strategy is we have a plant that's full now for at least 10 years, probably longer. So we don't need to find small little piecemeal resources to fill that plant. We have a strategy that's built around finding something that, you know, moves the dial for shareholders. So we're very focused on, when we drill something, does this have the potential to make a difference? Yes, great, carry on. No, okay, well, the gold's been there for 2.6 billion years. It's not going anywhere. We'll look at that again later.
No, definitely, and thank you for answering that as well, Duncan. The next question here is from Alan. Alan's asking, what are the main obstacles that the company needs to overcome in the next 12 months, and how is Gold Road strategically planning to avoid these or overcome them?
You broke up the last bit about how we're going to strategically, and then I didn't hear the last bit, Aidan. What was that?
Okay, so the question was, so it's from Alan. Alan is asking, what are the main obstacles and hurdles that Gold Road is going to need to overcome in the next 12 months, and how is Gold Road strategically positioning themselves to avoid such problems?
Okay, well, obviously the big push at GRUYERE I've already talked to, and that's to get the production rate up above nameplate, and that's basically based on the fact that we learned that the plant operates better than it was originally designed to, so that's a plus for us. So we have to continue, we have to show consistent quarterly performance, which we weren't able to do in 2020 because of the ramp up, which I spoke to earlier. But we also need to make I think we really need to start making some progress towards discovery. So we are focused very much on that. And the work we did in 2019 and 2020 has positioned us to start testing some of these great targets with some of the bigger rigs, the RC rigs and the diamond rigs. So we need to put some holes in the ground and start to generate some news flow and hopefully grow some resources.
Yeah, I just have one final question. So this is from Jennifer. So Jennifer has said that over the last 12 months, Gold Road's share price has fallen substantially. Jennifer seems to think that the fundamentals of the company is still the same, and why the share price is falling. She'd like some insight there.
Yeah, no, that's fair. So firstly, obviously, there's overarching issues of the share price has fallen a bit recently, aligned with the rest of the sector because the gold price has fallen back a little bit. Those are the macro issues which affect every stock available. But if you look at our performance in relative terms against the sector, we underperformed in our September quarter. We flagged that as a challenging quarter for us because that was when we set the plants up to go into fresh rock. As a result, we had some shutdowns and we produced less ounces there. And the stock since then has been slowly recovering, but we certainly copped a few challenges there. I think the other aspect to that is that because we did all this early stage exploration, there wasn't an awful lot of exploration news flow during 2020. Again, I think that will change. So if you plot our performance over the last 6 months, it's actually the best performer in the sector, but that's off the low base that we unfortunately set for ourselves with a underperforming September quarter.
Okay, well, thank you for answering all of those questions, Duncan, and thank you for taking the time to sit down with us here at Fortem. I hope it's been informative for the investors that we work with, and that they can have a greater understanding of the share moving forward. If there's any final questions, feel free to call or email us here at Fortem. We'll do our best to answer them, and if not, we'll pass them on to Duncan. And just to wrap things up, Duncan, I'll just give you the opportunity to sort of give us 3 clear indicators of why Gold Road is a good company, and why shareholders should continue to hold it or continue to buy it. If you just want to have 3 points there that you think are relative.
Yeah, okay. I mean, I've covered this probably in my last slide, but I mean, free cash flow, we are generating it. Growth opportunities through discovery and through GRUYERE itself, as I think I've outlined, and returns. Not every gold company pays a dividend. We pay a dividend. We share that wealth with our shareholders.
Okay, so we've heard it here with Duncan. I hope it's been informative for you, and thank you for taking the time to speak with us, Duncan. We look forward to speaking to our investors about Gold Road, and as I said, any further questions, feel free to contact us. Thanks, Duncan.
Thank you.